Hello everyone, I'm Tarun. I'm co-founder of Copperx, and today we have Tom with us. He's co-founder of WalaPay. We are gonna talk about stablecoins, payments, how it's affecting and helping users in across different geographies. So welcome Tom to our podcast today.
Thanks
We
for
are
having me.
grateful to have you. Let's start with a little bit of intro about what like who you are, what you are doing at WalaPay.
Yeah, for sure. First of all, thank you for having me. So I'm one of the founders of WalaPay. We're a global money movement platform, really centered around an API that allows our customers, typically fintechs and PSPs, to move money across really any currency and rail, and that includes both fiat as well as stablecoins, right? So we're seeing all sorts of different types of movements from fiat to fiat, on ramps, off ramps, cross-chain stablecoin orchestration, and really, we're trying to power all of that, right? My background, though, stepping back a little bit, I've been in crypto since 2017. I was at Consensus for a number of years, early on supporting Joe Lubin, the founder there, and then kind of spent some time with different product teams. I worked a little bit with MetaMask and Fura and so on, kind of seeing the wallet space, the more like node infrastructure space, et cetera. And then eventually moved over to corporate development, where I was doing a mix of like investments, acquisitions, and commercial partnerships at the Consensus level. And then really at that same time, my brother, who's actually my co-founder, he spent more time on the TradFi side, so working in banks as an engineer, et cetera. And ultimately, the product that we have ended up building at WalaPay is really a reflection of those two backgrounds, right? So trying to bring what's worked well with the traditional banking rails with stable coins to ultimately, we hope, create next generation money movement infrastructure.
Okay, understood. And currently, like with WalaPay, what are the geographies and currencies you are supporting?
Yeah, so today we support over 37 different currencies, over 100 different countries when you factor in like the Swift connectivity that we have. But really, what we are primarily interested in and working with are some of these emerging market use cases, right? So we work with a lot of folks in Mexico, Brazil, Colombia, Nigeria, et cetera, even here actually in the UAE, that are moving money, especially out towards Asia, right? And so often we'll see Mexico to China, or like Brazil to Hong Kong, Southeast Asia, et cetera. And so it's generally kind of moving in that direction.
Okay, makes sense. And like why stablecoins? Like why did you decided to build in stablecoin space?
Yeah. Well, I think kind of have to step back a little bit and go into why we like my brother and I got into crypto in the first place. We're from Belgium originally. We kind of grew up moving around between Europe, the US, Japan. I've kind of made my way back to Europe, but we moved around a lot and kind of kept bumping up against these payment challenges a little bit, getting paid in different currencies, sending money back home. We're fortunate enough that it wasn't like ever, a massive blocker for us, but it was always something that we kept bumping up against, right? And so crypto, I remember reading the Bitcoin white paper in 2013 and thinking like, this is an incredible, at least from an intellectual standpoint, like a new kind of solution to global money movement, right? Obviously, it turned out to be a little bit more difficult than just Bitcoin, right? But the natural kind of evolution from there is, we discovered Ethereum, and that for me was really like the first time where I was like, whoa, like the horizon and like basically the entire opportunity space really opened up around that. And for us, it just became clear that at some point, and we saw this early on with like Maker, and then that was followed by Circle and everything like that. It became really clear to us that stablecoins were kind of this real tangible solution to a problem that we had seen in our own lives and both in professional and personal context, right? And we'd been wanting to work on this for a very long time. That's why I started at Consensus in 2017, but it felt like only in the last 2-3 years did this really become something that just made 100% sense, right? That all of the different pieces from technology to the regulatory environment, et cetera, really started coming together, I think, in the last like 2 years.
Nice. And what did you used to do at Consistent?
So I initially started kind of in a chief of staff capacity to Joe Lubin, the founder, and then spent a lot of time on product strategy with some of the different teams. And eventually, Consensus really kind of went through a restructure. It was originally an incubator with a lot of different spokes. That's what we called kind of the different projects, the spokes that we had been incubating. So some of the big projects that came out of there were obviously MetaMask, but also Infura, Truffle, et cetera. So really kind of like foundational pieces in the Ethereum ecosystem. And I got exposure to a lot of that, and then eventually kind of moved into corp dev over there.
Okay. I think let's go deeper into what WalaPay is doing, right?
Sure.
How would you define your user? Who is your user?
Yeah. So we're really infrastructure, right? So generally speaking, we are trying to enable and empower platforms, and which we kind of loosely define as fintechs and PSPs, right? So some are actually financial institutions, others are more like technology platforms, but that are kind of building new use cases in financial services, right? And so our product is fully API based. I mean, there's a whole dashboard component to it, but the meat of it is the API, right? And that allows our customers to issue bank accounts, issue wallets, and then also make payments on behalf of their own customers, right? And that means that ultimately we are supporting B2B to C as well as B2B to B use cases.
Yes. And how would you define how these users are using these products? What are the real life use cases that, let's say, you want to highlight, or when you saw it and you were like, oh wow, this is really good, right? So
yeah, I mean, the cool thing about kind of where we're positioned is that we are enabling a lot of different kinds of use cases, at the end user level. Yeah. And so I can maybe highlight a few, on the more consumer side of things. We're helping apps and startups like Decaf or Zarpay, which just announced a big round today. Yeah. They're doing really, I think, very meaningful, tangible things in the sense that using stablecoin infrastructure, they're kind of creating a new model for fintech, in general, where instead of relying on kind of the status quo, which was to go and get a banking partner and get the FBO account and everything, instead you rely on self-custodial wallets as well as stablecoins to basically provide kind of that foundational financial infrastructure for your users, and then from there you can start adding on, an easy way to, for example, get paid in dollars, right, through a virtual account in USD that converts to USDC. From there, you can add on an ability or access to earning opportunities, right? So you can get access to US Treasury yield, for example, through various tokenized products. And then finally, you probably also want to make that useful on a day-to-day basis where, you might want to spend using a card that is linked to the USDC or just kind of cash out to your bank account. And so we help on the virtual account side. We also help in terms of the payouts into different local currencies. But I think that's a use case that's taking off, and we're seeing a lot of new kind of contenders in the fintech space kind of using that model. That's on the consumer side. On the business side, we're working with PSPs, some pretty big payment processors like Nuvei, where we have kind of a nice synergy with them because they're really focused on acquiring, right? So merchant acquiring. And then from there, we can help their merchants settle into different currencies in real time. We can help doing the payouts, in a lot of different countries, and even actually also do the stablecoin acquiring itself, right? And so that's enabling all kinds of businesses to just make their money movement operations much faster, and that has a lot of implications on everything else because it kind of delineates down from the cash cycle.
Okay, makes sense. And how would you define, let's say, what would you call the biggest challenge right now when it comes to, let's say, adoption? Let's say if if regular user, if they want to use stablecoins, right? Like, what are the challenges that you see?
Yeah, I think it really depends on like the country and the like whether you're talking about individuals or businesses and so on. I think, you know, regulation is still kind of number one blocker, especially for larger and more sophisticated enterprises and FIs, right? When we deal with some of the FIs that we are talking to, that's still kind of like the number one thing is like we need full regulatory clarity in a particular jurisdiction or market to be able to leverage stablecoins there, right? I think for end users, it's really about the UX, and there's still maybe like a perception of crypto as something that's potentially negative in some parts of the world, right? Whereas in others, there, despite existing friction, you know, you've already seen a huge amount of adoption that's basically very organic because there's a very kind of deep problem that is being solved by stablecoins like USDT, for example. Countries like Argentina or even in Nigeria, you know, we're seeing a lot of that adoption. And what's needed there is just better kind of infrastructure, especially connecting with banks and things like that.
And why are we seeing adoption in countries like Nigeria, Argentina? Like, what are the reasons for that?
Yeah, I think, I mean, it really comes down to what's the alternative, right? And in a lot of these countries, you know, obviously the currency is more volatile. It's harder to kind of save in the local currency. And so the natural alternative is the US dollar. But how do you get the US dollar, right? Easiest way to do that nowadays is through USDT, USDC, etc.
Okay, so is it like an inflation, I think we can call it?
Yeah. Currency
Any
risk.
other challenges that you have seen there?
You mean like in these countries?
Yeah.
Yeah, I think, you know, one thing that we see is it's not just access to dollars, but sometimes access to banking can be a real challenge, especially for some industries. And so if you can provide a really good alternative where, you know, the payments are working in a US denominated asset, and then you have a proper safeguarding, right? So there's some kind of, either you have like a really good self-custodial model, and I think, you know, companies like Privy and DFNS, et cetera, have done a really good job of making that easier for end users, right? Through MPC wallets that can be accessed through like social logins, email, you know, et cetera. And on the other hand, for some of the enterprise that we work with, you might need more of a custodial model where, you know, you have a custodian that can kind of act essentially in the same way that a bank acts to custody your assets, right? Your fiat assets.
Got it. So how do you think, like, what roles the bank will have, like, with stablecoins? Like, because I think nowadays, like, I think a lot of people, especially in crypto, like, we keep our funds in wallets. Right? For me, I think I can give you an example. Like, whenever I travel, I feel like I should be able to pay here with stablecoins, right? Because
Right.
I can. It's an easy access even when I'm traveling globally, right? So how do you think, like, you know, what, like, basically, like what roles the banks will play here alongside stablecoins? Like,
Yeah, well, you know,
will it get replaced also?
I don't think it's going away. You know, as much as I think, on one hand, the role of banks in many use cases is kind of getting disaggregated. So, you know, banks offer many different kinds of services, right? Like the most basic for you and me is maybe just somewhere to park your money, right?
Yeah.
I think some people are starting to shift over to self-custodial wallets and things like that. And often that's spurred because of some negative experience with the bank, right? But that's on a very micro level. I think if you zoom out, like, you know, 90% of B2B payments today is still going through banks, right? And so, you know, we're going to see, I bet, this year, stablecoins being launched by banks in Europe, for example, right? You see in Hong Kong, banks like StanChart that are going to be issuing a Hong Kong dollar-denominated stablecoin. So the opportunity is there, and you will see kind of banks start getting into this. And then, you know, that will naturally kind of start melding some of this together. But I think there will always be a use case for what banks provide, which I think, like, the very basic building blocks is like a place to park your money and credit, right? And the banks are still kind of in the best position to do that. But what's interesting is that, in some of these B2B payment use cases that we're seeing, we can also think about, non-bank options to basically fulfill those roles, right? So both on the custody side, you can have different types of custodians, and then on the credit side, you've got this big rise in private credit that's coming up, and you already see in the DeFi space, you have these decentralized pools of credit, right? That could actually be kind of funneled into these B2B payment use cases, right? So actually having private creditors fund transactions, et cetera, and taking on a little bit the role of banks.
Correct. That totally makes sense. And I think this is something very, very important to discuss alongside stablecoins, right? So there is something called CBDC. So what is your view on stablecoins versus CBDC?
I am pro stablecoin. I remember when I was at Consensus, we were looking at a bunch of different CBDC projects. I think in general, I'm less excited about that. I really think that the power of stablecoins comes from the fact that they are issued on these open, permissionless ledgers, right? Okay. And so I want to see these things getting issued on blockchains like Ethereum, Solana, Polygon, et cetera, right? And I know that some of the banks that are issuing their coins, they're considering that, right? Like Stanchart is probably going to be issuing on a public blockchain, right? And I think that is really where you have kind of the most power when it comes to stablecoins. And I'm not particularly excited about the implications for kind of governments issuing CBDCs, especially if they're on their own kind of, private ledgers. I think that has its own kind of implications.
But even with stablecoins, I think two things, there are, I think, almost 20 plus chains where even USDC is live, right?
Right.
And then we have this range of, I think last time when I went to DeFi, I saw that there are more than 100 plus variations of stablecoins. Right?
Yeah.
What do you think of?
I mean, it's a good point, and to some extent, we're still in this takeoff phase of, I think, stablecoin proliferation. Okay. We're going to see a lot of different coins, and it's happening because the incentive is very clear, right? Stablecoins are a great business, as long as you can get usage out of it and people actually parking assets in there, right? I think Tether made $10 billion last year in profit. Issuers even more and more come up, and there's also kind of this legitimization curve where you start to see banks, et cetera, getting into the game. And so where does this all shake out? I think it's going to be still quite a while, because you're also seeing newer kind of stablecoin designs, like architectures, right? We saw that with Athena. Yeah. There are other competitors that are now kind of coming up. Yeah. And so we're going to see more experimentation, different designs, at the same time, more legitimization within the more kind of tried and true models, right? Where it's fully asset backed. And then I think what you're going to see is kind of this delineation between what I would call more payment stablecoins, right? Yeah. Where I think you'll have less, but it has to be it has to hit some kind of critical mass. So you can probably put USDC, maybe USDT in that bucket, right? And then the other side is more what I would call yield coins, where it's essentially, it's some kind of financial instrument where what's happening is you're getting, revenue from the underlying assets. Yes. They could be short-term treasuries, but they could also be other kinds of assets. And those will continue to be popular because it's essentially a form of treasury management that's on chain. It's automatic. You can program it in different ways to kind of split yield, in different ways. And ultimately you have to factor in composability as well. And so I think there's a huge, area of growth there. But I think you're going to start to see that split over time.
Okay. I think even that depends on the risk factor of the user who's let's say parking their stablecoin, either different kind of yield issue. Depends on what is the risk factor that they want to put in.
Totally, yeah.
For example, I think I easily park my funds if they are giving me 5-6% in here, right? In US it could be lesser, right? So it totally depends on that for sure, right? I would like to touch upon stablecoin is the core area, but there are other areas around stablecoins, right, which are also growing, and I think like a lot of them are very exciting. So which ones do you think are the ones you are interested in?
I think the three letters are like there's fundamentally stablecoins are a subset of that broader RWA space, and I think it's just kind of the natural progression that after tokenized treasuries, we're just going to see other kinds of assets get put on chain. And I think it's going to start with more of these, assets that are fundamentally just like a digital or like an information product, right? Rather than, things like real estate, which would presumably come later, right? So I think, we're going to see bonds, longer term treasuries, equities, et cetera, getting shifted on chain. And then kind of, it is stable coins, but it's less what we're seeing today. But like one of the things that I'm super excited about as this space matures is fully on-chain FX markets, right? I think that's just the natural progression. And I think in the next like 2-3 years, you're going to start seeing really like meaningful markets that are moving on chain. And there is a bit of a chicken and egg situation, but once you kind of hit that critical mass, you tip over and it becomes really like a natural place to
more localized
Yeah.
version of stablecoins, right? Which one's the top one that you have connected or
In terms of like the other, obviously, EuroC is probably the next biggest from Circle, but we've been in contact with, folks at IDRX, for example, doing the IDR stablecoin, BRLA in Brazil. We also work with our partners at Kappa, who I think are working with Braille on MXNE. Maybe getting the I don't know if the E is before or after, but essentially, you're starting to see some more of these coins come up. I think it's not just a matter of minting them, because like theoretically you can mint these coins, but where are they being used? Like where is the demand actually coming from? For dollars, it's very clear, right? Like most of trade is in dollars. Initially, when Tether was getting started, it was being used as collateral, like for trade. So where is the demand? Where are the use cases? And I think that that will kind of inevitably foster the rise of these non-US currencies.
Okay, makes sense. And let's fast forward to 5 or 10 years. Like, what impact do you think stablecoin might have? Like, how does the future look like? Maybe in 2030 or 35, like with stablecoins.
My former boss Joe Lubin at Consensus was very good at kind of painting a picture of the crypto future. He might be one of your next guests, but I'll do my best here. I think really we want to see payments is kind of like one side of that, but it's really kind of the tip of the iceberg, right? Like we want to see credit move on chain and really trickle down through the economy, because at the end of the day, what we're excited about is making finance more inclusive and just more like operationally efficient, because that has impacts on everything, right? It brings costs down and it invites more people into the economy. It makes credit hopefully faster, and that kind of has a dynamic effect on the growth of that economy, right? And especially given how kind of natively global stablecoins are, it has the potential to do this on a global scale. And so that's ultimately what we're excited about.
Now, how let's say a day in the life of business looks like?
A day at WalaPay?
Like what would change? Like what would faster, cheaper, like what would change for businesses?
Yeah, I think, if you just actually go at a very tangible level, for one thing, like I'm excited to not have to call my bank to send a wire, that sometimes that takes me 30 minutes out of my day where I'm calling Citibank to send a wire. So that's like a silly example, but it's that multiplied by, however many, hundreds or thousands, because really we're trying to make all of these kinds of processes essentially automated in a way that like the money should really move at the speed of the internet, right? That's kind of the whole goal.
I think I can share something on this. Basically, we sent a Swift transfer to one of our customers,
Mm-hmm.
and it took us 35 or 36 days for us to
Yeah.
recover it.
Yeah,
Right?
and that happens.
And that's pain. Like, I mean, imagine your funds getting stuck for like a month, which you could have utilized for payroll, for example, right?
Yeah, exactly.
So I think stablecoins really help there for sure, right? Let's do like a rapid fire.
Hit me.
So I'll ask you like 4 or 5 different questions, and you can answer them quickly as soon as possible. So USDC, USDT, or any other stablecoin?
Okay, on this one, I'm going to have to go with USDC.
Okay.
We work in a lot of regulated markets, so USDC is the way.
Okay. Paying your friend for lunch in fiat or stablecoin?
Okay, I'm ashamed to say that most of my friends probably wouldn't be able to receive the stablecoin, but let's say it depends on the country.
Okay. One founder or company in this space that you admire?
Great question. There are many that come to mind. I would say Berhan at Keyrails.
Okay.
I think he has a lot of experience, and they're doing things in a different way, and I think it's really interesting.
Okay, I got to chat with him for sure. Your favorite chain for building for anything for crypto?
Another great question. Sure to make enemies here, but I'll say Polygon is the chain that we've been using the
Okay,
most.
good, good. Which chain do you use the most?
Polygon.
Okay, good. Personally?
Oh, personally?
Yeah. Which chain do you use the most personally?
Okay, I'm gonna go back to my roots, Ethereum.
Okay. Last thing you paid for with crypto?
Probably an NFT.
Nice.
But does that count? That's also crypto.
No, that's, I mean, yeah, it counts.
I could say art.
Yeah, art is good. One Web2 company that you think will issue their stablecoin next?
Well, I know that Stripe is going to issue their own stablecoin.
Oh, wow.
But I want to make a bet that at some point in the next year and a half, Wise will issue their own stablecoin. And
Good.
I want to make that bet because they have been adamant that they will not do so.
Oh,
So let's see.
okay. Any like non-fintech company you think will issue their own stablecoin?
Yeah, I think, going back to our conversation earlier in terms of the yield coins versus payment coins, like if you think about stable coins as a treasury management solution,
Yeah.
I think a lot of enterprises will issue their own.
My guess is Starbucks.
I think that is a great call.
Yeah.
I wonder if like they even need to,
Yeah.
but a good call.
Yeah. Most underrated chain for payments today?
Underrated?
Yeah.
I think maybe Solana still,
Okay.
just because there's a lot of kind of underexplored capabilities with token extensions and things like that. So I think it's going to keep increasing.
Okay. Peer-to-peer payments versus B2B payments. Like which one will have like 100 million users first?
100 million users. Well, I mean, if we're talking about user count, it'll be peer-to-peer.
Okay. Yes. Okay. Predict the headline. This is good one. First Fortune 500 company pays dividend in USDC.
Okay, interesting. First Fortune 500 company. I need to think about this one. Okay, just cut this, but I'm gonna think about it.
Yeah, we'll cut it.
No, I actually want to think about it. I don't even remember the Fortune 500 companies.
Any Apple, Microsoft, Amazon.
Is
It's like
Tesla
paying
in there?
dividend, right? So the stocks that you are owning, like their stocks, and then they'll pay you dividend. So it's easier for them.
Yeah, it could be. I wonder if like Visa or MasterCard would do that.
Or Coinbase. Okay.
Okay, should we redo the question?
Yeah. Okay. Wait. Let me just.
I'm just stealing your answer.
Yeah.
By the way.
Okay. So predict the headline, and this one is good. First Fortune 500 company pays dividend in USDC.
Okay. Well, maybe Circle will be a Fortune 500 by then. So
Okay.
maybe they'll be the first. But otherwise, I think good candidates would be Coinbase or potentially Visa or MasterCard.
Nice. For sure, I agree. I have one question which is not related to crypto at all. So let's say crypto vanished tomorrow. What would still be worth doing for you? What would you do?
Yeah, I think, the fundamental problem that we're solving isn't really crypto.
Okay.
Right? Like we're trying to solve cross-border payments.
Yeah.
And I think I would still be working in that industry because it's something that's always been, a passion for me.
Okay.
Otherwise, what else could I see myself doing? I think that for me, the other really big important things that we're contending with today is, AI on one side
Yeah.
and then energy on the other.
Okay.
And it's always been super interesting to me to see different forms of renewable energy and kind of now there's like these things are obviously intertwined, right? AI is driving energy investment and so on. And so I think that could be another space that I'd spend time on.
Makes sense. Makes sense. I would like to ask you, like, what would you want people to build or founders to build, right? Like, what are your top 3 ideas that you think people should build on? Maybe stablecoin or anything that you have in mind, so that people know basically.
Yeah, sure. I think, in the stablecoin space, there's still a lot of room for better compliance tools.
Okay.
On one hand,
100%
like
agree.
there's a lot of people like doing compliance tools, but it's very complicated, right? So that's probably priority number one.
Makes sense.
And within that, you have transaction monitoring, dealing with the travel rule, different kind of, specific like jurisdiction level rules across different countries. This stuff is hard.
Okay.
And so that's kind of the number one place that I would look at. Besides that, I think, there's still like space to build in credit, and that can take like many different forms, right? You have seen some kind of stablecoin credit focused companies like ARF, but there's a lot more that can be done and like different forms of credit. And so I'd say these are the areas that I would be excited to build in.
Okay, makes sense. Love it. I really loved the idea. I think, yeah, that's it. We have covered mostly everything. But yeah, I have one personal question for you. Would you rather build a 10 million ARR company or a $1 billion valuation company?
I'd like to do both.
Okay. You have to pick one.
I think I'd choose the first one.
10 million ARR.
Yeah, but I'd make it 100.
Yeah, I mean, see, once you reach 10, you can for sure figure out for 100. But yeah, okay. Makes sense. Love it.
Thanks, Tarun.
Cool. So thank you so much, Tom, for joining us today. And I really loved listening to you. I learned a couple of things from you today. And yeah, best of luck for WalaPay. Excited to see you growing, WalaPay growing, and excited to work with you, even like with Copperx and WalaPay. So yeah, thank you so
100%.
much for joining us today and spending time in the token week. So thank you so much.
Thanks very much, Tarun. It was a great conversation and definitely looking forward to working with Copperx.